Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the MJ sector. The carnage continues in a lot of individual names. CGC certainly standing out as we're getting down to extremes. So the weekly RSI is oversold, down at 27. Daily RSI down at 26. And if you scroll back historically, we've only seen a daily RSI maybe 2 or 3 times lower than this level, pretty much since this stock started doing anything. So weekly, daily, 4-hour RSI just getting oversold. A little bit of an after hours bounce right now, but RSI closed today just under 30 on the 4-hour. The hourly RSI was crushed at the end of the day. It was just under 20. Again, short-term bounce right now is cooling off RSI and extended hours. And overall today was a slow fade kind of day. So I'm looking for an oversold bounce. I already have one entry. And I have potentially 3 more. Initially, I was planning on 1 more entry, and I'll lay out my game plan and how I shifted my game plan based on what the price action was doing. So first things first, my game plan this morning was looking for a quick oversold bounce, just your standard, and I entered on a break of 26. And actually, you know what, it wasn't an oversold bounce, standard oversold bounce that I was looking for. I was looking for a bounce to play out on the hourly and daily time frame. So from inception, the game plan has been more of a swing trade for this kind of bounce, not just an oversold quick flip trade. So I made my first entry on the break of 26 psychological, and I entered in the upper 2590s, and then said to myself, okay, I will enter a second position if we drop down to the mid $25 range, and the play will be based off of 25.26, which is our key weekly and monthly support, which was breached today. So that was my initial game plan. From there, these little bounces on the way down changed my game plan. And we ended up with a little 15-minute bear flag. I said to myself, okay, my aggressiveness scaling into oversold bounces matches the bears. I've said that many times before. That's my style. If we're seeing an all-out dump, I'm aggressively scaling in. If we're seeing slow dumps with little short-term bounces to cool off RSI, I am not aggressively scaling in. So rather than make my second entry during this 15-minute bear flag, I said to myself, okay, I am no longer going to make my second entry here. I am going to reserve my second entry for if we break $25 today. Then things will be getting extreme. So we just had this slow bleed for the rest of the day, faded down to our key support. We broke it at the end of the day. A ton of volume started pouring in. Little bit of a bounce here after hours. So right now I have one position that's in the red because my break even on that one position is 25.90, 25.95, 25.97, something like that. I should probably get the exact level, but I know it's just under 26, so I just count it as 26. I'm looking for a gap down open tomorrow. That's my ideal scenario. I'd love to see a gap down open under $25, a quick flush down, and then a V-shaped recovery and a new high of the day. That's the best kind of oversold bounce because you get that flush, you get that volume climax, and you get that swift turnaround. So I am looking to add more tomorrow. Depending on where we open will depend on how I end up making this play. If we see an open, a higher open, and then flush under 25, if the RSI levels are extreme enough, I will add a second position. And again, the more extreme we get, the more aggressive I'm going to get. So let's just say, for argument's sake, let's say we get a higher open, and we drop down and break $25, and we flush down to $24.80. I make my second entry. My break even is then just under $25. Nope, just under $25.50. So then to get back to break even, we don't need much bounce on the hourly time frame at all, and even just an hourly lower high could reach that point. I'm looking for more than just an hourly lower high. I want to see an hourly trend change and a bounce on the daily, and I want to see a daily lower high. Every single day since the earnings reaction, which is now 7 days in a row, has been a lower high. And we reach a point where we get exhaustion, seller exhaustion. So everybody that's going to sell based on the negative earnings and based on the negative articles that come out after earnings, we get to a point where all of those people have sold. And I think we're approaching that point. So the only people left are dip buyers, which is why we see short-term bounces. Again, I'm not looking for a daily trend change. I'm not looking to try and nail the bottom. I'm looking for a daily bounce for a lower high to be set. I'll be watching the daily 12-period exponential resistance as a target. Tomorrow, that's going to drop down into the low $28 range, and that will be a short-term target of mine. So, for example, if we drop down, break 25, I make my second entry. Let's say tomorrow gets real ugly and we drop down and we break 24 and the 4-hour RSI gets into the mid 25s. I'll make a third entry and then we drop down to 23. I'll make a fourth entry. So if that were to happen, my entries would pretty much be 26, 25, 24, 23. That would give me a break-even price of 24. I think. 24. Which I'm perfectly comfortable with. And it would be a little bit less than that, or a little bit more than that. It would be somewhere around 24, 25, 50. Hypotheticals are throwing me for a loop here. But the bottom line is, I'm very comfortable scaling in for the daily oversold bounce. And the game plan, if I have too big of a position, let's say I scale in 3 or 4 orders, I can exit half of that position, break even, and be a lot more comfortable freeing that cash up. So that's me and my short-term trading style. Let's say you're looking longer-term swing trading. Is this a good entry? If you're comfortable with oversold bounces, daily and weekly oversold bounces are great long-term entry positions because you can put yourself in a very low-risk position. And what I mean by that is, again, scaling in, because that's the way I think is the best strategy for playing oversold bounces. But let's say you scale in 25.50 and 24.50. And let's say it's a worse entry than that. Let's say scale in 26 and 25, and your entry is now 25.50, break even. Let's say the bounce gets going, and we get up to 26.50 and you're up $1. You're up almost 4%. You can either take that profit, but if you're looking longer term, set your stop at break even and hope that you nailed the bottom enough that the bounce gets followed through. If the bounce were then to get up over 28, that gives enough space for a higher low and higher high to potentially play out. Again, your odds of getting stopped out would still be fairly high, but your risk is $0. So putting yourself in a position where a longer term position could be had, and that's something I'm going to look to do. Right now I have a different account with some longer term trades and I have some cash set aside for CGC that I haven't touched. So let's say we get a gap down open tomorrow. I would be comfortable making that long term entry, getting a little bit of bounce follow through. If we get it, I'll set my stop at break even. If I get stopped out, no big deal, back to where we started, and I'll wait for a daily trend change at that point, the first daily trend change in 4 months. And if I don't get stopped out, then I nailed the bottom. So risk to reward favors oversold bounce plays as long as you have some experience with oversold bounce plays, of course. And again, protecting those positions as soon as you get a little bit of space between where your break-even point is. So I'm looking forward tomorrow and seeing if we get that gap down open, although this extended hours bounce, cooling things off a little bit. So we'll see. It all depends on how the open is as to what my game plan tomorrow is going to be. And we're just going to look for an hourly lower high to be set on the initial hourly bounce. We'll have to change the hourly trend for any meaningful follow through. Then we zoom out and we just look for a daily lower high because anything under 34 is just a daily lower high. Cron, bear flag on the daily, certainly looked like one yesterday. It's been confirmed. We dropped to a lower low. Not oversold yet on the daily and not oversold yet on the weekly. So that's a difference between it and CGC. There's a lack of support. So Cron right now is absolutely a falling knife. And if you'll remember, if you were watching these videos months ago, I was making attempts at a monthly higher low and long-term entry in the $13 range. And I did exactly what I just talked about. I made an entry in oversold conditions. I set my stop loss. I think I exited it in the green, but if I set my stop loss break even, zero risk. So I was stopped out. I did end up with either break even or small green. And now here we are dumping to lower lows, and I had zero risk attempting that long-term entry. So that was a great place to put myself in, oversold bounce. And I think I got a good entry right around $14. We saw a little higher low, higher high, and then I stopped myself out when 14.45 broke. I'm not sure if that's exactly what it is, but it was something very similar to that. So that's an example of what you could be looking to do on CGC for a longer term entry. As far as Cron goes, falling knife, RSI, not too beat up. I'd have to see a break of $11 for me to get interested in an oversold bounce at this point. And it is just a falling knife. So we have to be cautious. Anything on the daily under 12.25 is just a lower high. Anything on the hourly under 11.79 is just a lower high. And support is 11.52 and $11. ACB is looking more and more like a daily bear flag. So breaking the low of yesterday, closing at the low of the day, 578. Then we're looking down at 575 and 565. If we break 565, we confirm the daily bear flag. And then from there, after 565 support, we're going to be looking down at 5 psychological. Not oversold on the weekly, not oversold on the daily. Certainly some correlations with CGC, but CGC could potentially be dethroned as the leader in this sector. And the reason is the fundamentals now, which are mattering more in this space. So if CGC is going to be dethroned, I'm going to be watching to see who can change the weekly trend bullish first. And right now, the names that are in the running to do that are APHA and VFF. So if those weekly trends change bullish, as far as I'm considered, technically speaking, those names are now stronger than CGC. As far as, will those names be accepted by the market as the leaders? I doubt it. It'll probably take a lot more than that. But, even Kramer recently was talking about how Cron and APHA were potentially surpassing Canopy with the reaction to the most recent earnings. So APHA, I want to see that lower high compared to 696. It does look like we're topping out a bit. 672 was the high of today. If tomorrow we break 641, the low of today, then our new daily lower high is set. And that's when we're looking for the higher low to form compared to 583. And best case scenario for these bulls would be a daily trend change telling us the weekly higher low is established. So it's still going to take a lot for the bulls to change this weekly trend. Step number 1 is change the daily trend to give us the higher low. But from there, again, leaps and bounds ahead of other names, because any other name that we just looked at, ACB, Cron, CGC, they can all bounce on the weekly time frame, and we know they're just looking for a lower high. APHA already got that lower high out of the way due to its earnings reaction. Now we have the higher low trying to form, and if we can get back up over 760, that's a weekly trend change. That would be very notable. And again, it would stand out, and you better believe I'll call APHA the strongest name in the sector if that happens. A lot of people think I don't like APHA. I have not liked the technicals of APHA for a very long time, but that is changing. And so I will absolutely call APHA the strongest name in the Canadian MJ space if we change this weekly trend, and if VFF doesn't, because VFF is in the running as well. So TLRY, daily bear flag, looks like it. Strong close yesterday with that guidance update. Gave it all back and then some today. And we're just looking at the low 2872. If 2872 breaks, the daily bear flag is confirmed. And we look to 28 psychological. New short-term resistance, very clear, 3240. A play like this, when you see a very big bull move into the end of the day, whether it's in an uptrend or a downtrend, the next morning, if you do not break the high of the day in the first I used to say the first half hour just to give space, but it's really the first 10-15 minutes. If you do not break that resistance level, it's a glaring red sign. Head for the exit to the bulls. Take your profit now. We couldn't see follow through. We're not heading higher, at least in the short term. Lock your profit in. That's exactly what it was. Our high of yesterday was 32.40 during regular trading. We hit 32.17 this morning. Look at this 5-minute candlestick. This is the 5-minute candlestick opening, and it opens at 31.53, quick bull push. Let's break high of yesterday. Up, we came 23 cents shy and we failed. Everybody bails as fast as they can. Race to the exit, and we dropped 6% or whatever it was, more than that, right away. That's a common play. After a significant move to the upside, if you do not break the high of that move the next day, early in the morning, it's a signal for profit taking. So low of the dump at this point on the daily will be tested in the short term on TLRY. VFF. So VFF broke $12 support. We are now in a daily downtrend with a lower high and lower low. Any bounce on the daily chart under 1322 is just a lower high, keeping the downtrend intact. Our next support is 1141. So we zoom out to the weekly chart. Weekly top has been set. We knew we were due for weekly consolidation. This move came straight off the low of consolidation. So we know a higher low and higher high are needed for follow through. So just like APHA, significant weekly move, but now looking for the higher low to form. APHA is further along in the process of forming its weekly higher low than VFF is, but we're going to be looking for that higher low to form, and a daily trend change will be the indication. If we change the trend back to the bulls, let's say we drop down a bit further, we bounce just a daily lower high, higher low, higher high. That's our weekly higher low being set, and we're going to head back up and look at 1460 to have to break to change the weekly trend. So for the Canadian MJ sector, as far as I'm concerned, it's a race between APHA and VFF as to who can change the weekly trend first. And we'll see if they even can, or if nobody does, and we just stay bearish. T-God, daily inside bar. Break the inside bar bearish tomorrow under 317, and we'll be looking for a higher low compared to 295. Significant size of a bounce, plenty of space for a daily higher low to form, and we'll have to change the daily trend from there for the momentum to go back to the bulls since losing it after earnings. And again, here's an example where very quickly the selling pressure was exhausted and we see the bounce. So bearish reaction to earnings, selling pressure, and then no more sellers left and the bulls step in. So we're watching for the same thing to happen on CGC. If it's an inside bar bull break, then our daily lower high has not been set yet, and we're looking at 331, 332, and then a gap fill to 347. Curaleaf, although I actually just want to peek in at Labs. Labs is still dumping. Daily RSI not oversold. 4-hour RSI not quite there. Hourly RSI did get oversold, and we saw a bounce. We're watching for an hourly lower high to form. Have to change the hourly trend for a meaningful daily bounce to take place, and we're just looking for a lower high compared to 630. This looks a lot like VFF on the daily. The last thing the VFF bulls want to see from here is multiple more red days in a row after breaking to a lower high and lower low. VGW, trying to get its bounce going, looking for a higher low compared to 312. We held it by 3 pennies. Have we changed the hourly trend? Not yet. Have to see a higher low and higher high for us to be confident that daily higher low is going to hold. And then we're looking for a daily lower high in the 360s or so and a tightening range into next week. Need that hourly trend change on VGW. So we have to be watching correlations as well. If CGC does get an oversold bounce going, we have to be watching our other names going to respond to that as well. So Curaleaf, still weak, on the verge of another leg lower. Remember, we never changed the daily trend. We saw a big bull move up, big gains on the news of the merger or buyout of the private company. We never changed the daily trend. We pulled back hard. We saw a bounce, didn't break the high, and then faded back down. Lower highs and lower lows continue. No trend change. So we're looking down now at 839. And this, for 2019, it will always be the summer that I remember as significant bounces in the MJ sector on both Canada and US side of the border, but no trend changes. And this is just time and time again with CGC and ACB and even APHA. Haven't changed the daily trend on APHA yet in months. So Curaleaf, if we drop down and break support of 839, we're looking down at the lowest price we've seen of 802, on the verge of giving everything back from that news announcement with no daily trend change. Anything under 976 is just a daily lower high. If you'll remember back, I was entering Curaleaf anticipating a daily higher low would form. It did not. Played the oversold bounce. I bailed on everything on the size of this bounce. And I exited my entire position, and that's because I did not trust these bulls. If they're not going to change the daily trend here, I am not trusting these bulls to change that daily trend. I'm going to wait for it. Because if you can't change the daily trend after a significant bull move of 30% plus and significant bull news, that's a red flag. So headed down to test support. C-Web, getting real tight. C-Web bulls really want to hold a higher low compared to 2308. They're making their stand at 2441, and now they have to break 2680 for this little higher low and higher high to give us another weekly higher low in the uptrend. If we can't break that lower high pattern, 3010, lower high at 2880, lower high at 2680, if we can't break that pattern, we're headed back down to 2308, the recent low, and consolidation can get more significant from there. CL, earnings gap up. Gap ups are for selling, especially in a sector like this, as we are in right now, as far as the fear cycle goes. And we closed lower than yesterday. Earnings in the US space don't matter, in my opinion, right now. Do they matter longer term? Sure, you can make that argument, but think about the target market of earnings. Who does earnings matter to? Earnings matters to hedge funds, institutions, savvy investors. Are any of those people trading on the CSE and the OTC? Not many. So your target market for good earnings is not here. All the people who care about good earnings are trading on the NYSE and the NASDAQ, and they're not even looking at OTC names. Some of them are legally not allowed to, whether it's a hedge fund or an institution or an ETF, whatever. But it's the kind of thing where we are in the grips of the OTC. And the OTC to me is short, fast, bull spikes, long, drawn-out bleeds. This is the OTC that I'm used to. First stock I ever traded, MJNA. I traded penny stocks for 3 or 4 years. This is what I'm used to in the OTC, where you go from 7 cents to 50 cents. So what's that? 700%. And then month after month, you slow fade, you give it all back. 8.5 cents to 48 cents. Huge move in 2 months. Slow fade, give it all back for 2 years. Then you go 4 cents to 26 cents. Huge move, slow fade, give it all back. And if we look at these USMJ names, while these USMJ names are more legitimate than any penny stock I've ever traded, there's a huge move and we're now in a slow fade. How long is the slow fade going to last? We're still in the midst of it. So, again, earnings important, yes. Why is the market not reacting? Because people trading the OTC don't care about earnings. Where am I? CL, bearish engulfing candlestick. And at this point, support is down at 1056, 1001, 940. Bulls are going to have to get over 1164 in the short term to prove anything. OH held on better, and that's not surprising to me because there's not really much reason, in my opinion, to be holding CL rather than OH. But OH is struggling as well. It saw profit taking. It didn't break the low of yesterday. It didn't close below the low of yesterday. It closed green, so that's a distinct difference between CL and OH today. But our daily higher low is 711. If we break 711, we lose the daily little uptrend that we have, and we're then looking back down at the low of 640. So I may be looking to exit if 711 breaks. I do still have a smaller, longer term position, and I may exit if 711 breaks. IAN, still just trading sideways. You can call this a bear flag on the daily. It's a little bit drawn out just as far as sideways trading goes. Normally we would see a bear break by now, but I'm just watching the 4-hour time frame tighten, where we have the low at 312, high of the bounce 350, higher low of 318, lower high of 343, and bulls are trying for a higher low again. So 318 and 312 are key supports, 343 and 350 are key resistances, and we should see a break of one of those levels sometime within the next 2 trading days. TRUL, hourly oversold bounce got follow through. It started today as a triple top. We initially rejected from 1110. Then when we got over it, we saw 3%, very quick follow through, pulled back to support, broke support by a penny. That's a double bottom, headed back to the high of the day and couldn't break it. So I'm watching it as a high, low, lower high. If we start red tomorrow, the bulls have to hold 1078 to stay in this hourly equilibrium. Keep in mind, when we lose the hourly uptrend, our daily lower high has been set, and we're just looking for a daily lower high to be set on TRUL, because anything under 1330 is a daily lower high. MedMen, still close to a bull break, and certainly can't be said for many names in this sector. 284 and 293 have to break to confirm this inverse head and shoulders pattern. Bulls still holding on well. 265 short-term support, closed at the high of the day. Bulls need to break 284 tomorrow. CVSI, perfect example of people in the know, loading up for multiple days, and then the news comes out. What was it? Vitamin shop, some kind of deal. I didn't even read the news release. As soon as I saw that, I said, man, that is blatant. People are getting away with inside info. Nothing's going to happen to those people. They're putting the money in their pocket. And as soon as I see that happen, I don't care what the news is. Yes, if you bought at the open, you made money. And if you did that, congrats. But that's just me paying off the people with inside info, and it grinds my gears. Because they knew this news release was coming, and so they bought and ran up the price before the news release, and now they're going to sell into the news and lock in their quick profit. So short-term resistance is $3.89, followed by $4, $3.90 right there. That's why we're rejecting. And hourly uptrend to keep the bulls in control. Short-term support is 376. Break 376 without break 376 without breaking 389 tomorrow, and a daily inside bar will be very likely. And when we pull back and lose the hourly uptrend, we'll have to form a daily higher low compared to 306. So that's where we stand. Bears still in firm control of this sector. Sector momentum has not shifted. Sector sentiment has not shifted. For the U.S., we're waiting for a catalyst, right? A significant catalyst from the federal government. And right now they're in recess all of August. So that's not happening in the near term. Could it happen in Q4? Yes, absolutely. DOJ approving some of these deals between CL and OH and other names. That could happen in Q4. They said they expect it in Q4. We'll see if it happens. I've seen plenty of times where companies say they expect something. I mean, talk about penny stocks. I've seen dozens and dozens of times where a company says something's going to happen, uplisting or whatever it is, and it doesn't. So don't take that written in stone. It can very easily not be Q4. They said they expect it in Q4. That would be great because that would be a short-term catalyst for perhaps a little bump in the sector. But I would not be shocked at all if it didn't happen in Q4. So we'll see what we get into tomorrow. Watching CGC, that has all my focus into tomorrow. We'll see if we get the gap down open, which has been elusive in the recent past. If we open in the middle of the range, up at 25.50 or so, it's going to make my trade game plan a bit more difficult. So we'll see what we get. I appreciate you watching. Make sure you do some good things out there. And we'll see you tomorrow.
Right. Gonna go get some tacos or what?
Yes, sir. Hell yeah.
You stoked?
Hell yeah.